What's up, everybody? It's Semper from BRT. We have week nine in the books. Unfortunately, Toad does not have his his trading computer with him, so we're just gonna jump in and do a lesson on bias. Figuring out your bias is part of it, and then switching bias is the next part of being able to trade. If you Some people get stuck on a certain bias and then it make it hard for them to switch to a long bias. Brandon has a method of being able to switch biases, and that's either using the fibs or using anchor VWAPs, pretty much using an indicator to see how price action is reacting. Once price action starts reacting a certain way at a certain level, whether it's a daily or the weekly level, we jump we switch biases sometimes. Sometimes it's a controlled sell, sometimes it's a controlled buy. Usually that happens on a Friday where it just keeps selling and it doesn't lose the 10 SMA. The 10 SMA is a good gauge to be able to see if it's going to be a controlled sell or controlled buy. If price action cannot lose or cannot um, get back above the 10 SMA. One of the biggest things that I use for bias or for daily bias is I always jump on the daily. Um, and the first thing that I love to do is fib out when the market reopens up at 3 p.m. Pacific Standard Time. One of the biggest things that I like to do is fib out the high low of the previous day. So for this day right here, this was yesterday's candle. So I would fib out, and on Tradeovate, it's opposite of Ninja Trader or TOS, where you gotta go with the direction that you want the fib to go. So if I want it to go down, I would fib from the top on Tradeovate to the bottom. And the first play that I always look out the gate as soon as it opens up is the retrace back to the 50%. Today we didn't get it, but you notice that it can give you the bias for the day, right? Because if we lose the 100, it it opened up at yesterday's. It didn't gap up or anything, so it was opened up right here. My expectation when I fib out the high low is for this body to, or price action to pop above here, start creating higher lows, and then target the 50%. Now, if we don't get that and we start creating lower highs right here, then my bias first, and I always tell these to the BRT members, is you have to take things in levels. You can't expect for it to go all the way down here to the 161 right out the gate, because we have one level right here, the 666, that could be a speed bump, or it could catch the price action and then come back up to the 100. Because that's another play that we look for, is the shy of the 161. So we shy of the 161 and then we come back to the 100, and we either continue going up to back up to the fib box and back up to the 50%, or we finally tag the 161. So yesterday told us that once we break the 100 and create lower highs, then our first target would be the moving average, or if you're just a fib player, then you can hold on all the way to the 161. Now, since this is the daily fib, if we go down into the intraday, I usually like to use a 5 minute. You can see it tag the 161 right there. So one of the members had a question that it's hard for them to switch bias after, after his pre-market breakdown, and he, say for in this case, he was short bias, then the fib would be a good tool to use, because once you get to the 161, and the major thing you want to pay attention to is how price reacts at that level. So once it hits the 161, it just tagged it, right? You could have had where the body closed below the 161, and that kind of signifies a little bit weakness, and then it can continue going down like this to the 261. But right here, what you want to pay attention to, we're coming down. It looks like we found a base at the 161, and then start using our other the other tools that we like to use, which is the RSI right here. We got higher lows, and then the MACD. Usually the MACD will, the RSI tells you that it's gaining strength, right? So it's gaining strength to pop back up. The MACD, what I tend to see a pattern in is the cross. Once we get the cross right here, then the move starts to develop in the direction. So these are going up. So we got higher low on MAC, higher lows on RSI, and then finally we start getting higher lows on price action. So once I know that we have a base and we have higher lows, I always do the habit of doing a fib. Now my first fib would have been from the low to the first red pullback. If you're going up, you could have gone to this one. Once we come back down, breaks the 50, you can leave it there, because both of these fibs will work. But usually I tend to do like these two strong candles. I would have adjusted. I went to the top of the red candle, or you could do, the 2 wicks. Either way, it's going to be a little bit off. It's just whatever you're accustomed to, whatever you're used to. But like I said, that fib lines up with the golden pocket and the 10 SMA, and we still got higher lows. So what I tend to do is wait for the base. You want to see at least, 2 hits, one or two, a higher low or a double bottom. It doesn't matter. You want to see a base and then fib. We wouldn't have had this action right here. So my first fib would have been from here to here. And as you can see, the fibs will kind of stack up on top of each other. From there to there. As you can see, it's a little messy, but we got the fib right here. The golden pocket is all right here. The way that I like to use them, or use as confirmation, is I like the style that I trade is, if I'm going to go long, I'm not going to go long here. If it would have tagged the 0%, then I would have went long to the 50%. Right? But me being a conformational trader, I want to see it bust back above the 60, come back, tag the golden pocket right here. And we have double support. We have the moving average, we have the 50 SMA, the golden pocket right here. We also got higher lows on the RSI, got higher lows, and then we got the MACD cross right there. This little doji is pretty much my over under level. So once I see that the price comes down, gets back up, and once it starts holding above that doji and above that 10 SMA, you can say that it's gaining strength. but it comes back down. Like I said before, I want it to bust all the way through, come back down and tag it. That's my confirmation right there to my first target. My first target could either be the 100% fib or the 50 SMA. Depending if I have a cushion, if this is my first trade or if I have multiple contracts, maybe I'll take one contract there, lock in some, and then lock in the last here. Or let some ride until possibly the 161 or the 100 EMA. Any questions? Any tips?
I think that makes sense to me.
No question. But a lot of people, a lot of traders is hard for the one of the hardest things for me was waiting for that confirmation. And I think that goes for a lot of traders is waiting for that confirmation because this big green candle right here, you would start to get FOMO, right? So then you get in right here and then look at the next candle goes back down to where you should have been getting in. So you could have got in on this either at the 50% or somewhere in here. You would have been good right there, but it's a more confirmational trade if you wait for it to come back down to it. And I want to see a red pullback into it. A nicer clean.
Quick question.
Yeah.
Yeah. So on the first fib that you would have drawn, that would have been on that first red pullback.
Yeah.
Okay.
This one.
What would have stopped you from taking the trade when it pulled back and started to create that first green candle instead of waiting?
This one.
The previous one.
This one.
It came down, it tagged the 23.6. It looked like it had strength going back up. You got a little bit of RSI push. So what would have stopped you? What would have made you wait? The angle of the moving average?
Yeah, the slope of the moving average. Because if you notice, if I would have got in right here, look at the 10 SMA slope down, right?
Because it would have gone along really nice for a minute as it went to the 100 fib, and then it would have slammed back down on you.
Yep. So if you're not if you're a fib trader and you got in right here, then you probably should have locked in right there, right? That would have been close to 60 points, 70 points almost
Right.
from here to here, which is in my eyes, that's a big move right there. So yeah, you could have went down. I mean, you could have got in right here, but like I said before, I wanted to confirm from the top side, right? This is not even confirming from the bottom side, unless I got in down here, which I wouldn't have. Because that's just me trying to catch knives, right? Because it could have went like this and went down.
Yeah. Yeah. Okay. No, I appreciate the explanation because I like the walkthrough that you did in moving it forward, waiting and moving it to the next series of high and then retrace.
Yeah.
Yeah.
Yeah,
Thanks.
and you could have taken it, but look at if you fib right there and you get the pullback and you get in right there, you definitely would have got stopped. Or
Because I think that's what a lot of uh, maybe newer to fibs and using them, you'd see that first pullback and you'd be like, oh damn, that works, and then it gets slammed down on you'd be like, oh crap, that sucked.
yeah. Yeah, and usually like I said, pay attention to the slope if you're using moving averages. If you're not using moving averages, then pay attention to the RSI. You want to see a higher low first. Right? Because right here, if you would have got in right here, you would have had this against you, the moving average slope is steep down, and you don't have no higher low right here. See, on the RSI, there's no higher low at all. It's just a straight line up.
Yeah.
But if we would have got a higher low right here, like that, instead of over here, then this probably wouldn't have went as far down.
So in the end of the day, it's a matter of waiting till you get an alignment on the fib, on the moving average, on the RSI. You get the MACD confirming a crossover, so you're better off when those things align.
Yeah, the more indicators that you have aligned in your favor, the higher the probability of your trade playing out, right? Because right here you only got the fib, right? If you would have fib from here to here, and then you're like, okay, I'm waiting for the golden pocket, and then you enter right here in the golden pocket, and you're like, well, why didn't it work? You only had the fib working for you. You had the fib working for you. You had the moving average working against you. You had RSI working against you. It wasn't fully developed yet, the RSI. MACD is still bearish right here because it's still apart.
Yeah. No, good explanation. I appreciate that.
Yeah. And then going back to where I originally entered, was fibbing that because I had that fib, and then I got a new high. We got a higher high, and then we got a higher low right here. But you move adjusted, and now look, when you move it to here, and then you start to see the moving average. You get to see it flattening out right here. Right? Now you got two higher lows on the RSI, and now you got the MACD cross. So now all I'm waiting for now is a confirmation. You could have got in at the break above the 10 SMA. Right? If you're a moving average trader, but what I tend to pay attention to are dojis. Dojis. The dojis are usually my over under my over under levels, or their targets most of the time.
And this, just to finalize, this would confirm your direction of bias for this period of time.
Yep. And I'm not expecting, since we're in a downtrend, I'm not expecting it for a V reversal, right? Because you have this strong leg down, and once we broke above it and then came back down, and that's something that you guys need to pay attention to is we break above it, like right here, right? We were on top of it. We broke above it, stayed on top, and then we broke below it. They got back over, and then we never came to the 100. We tagged the 100. But as you can see, the moving averages are they stack up like nicely on top of each other, right? And once it breaks above it, when it breaks above it right here, hard, you're looking for it to retest to go down. Right here, since it broke above it and it didn't hold, what I'm looking for, you always want to look for the back test of a moving average. If it breaks above, like it did right here, it broke above, we got the back test, but it didn't hold. We were bearish here, we were bearish here. Sellers were still in control. Look at the histogram. And another thing that I've noticed is, see these big candles right here? If you get in long, somewhere right here, if you like to catch knives, fib out that candle. Because I bet you most of the time when you see a big red candle, a big green candle, it's going to retrace 50% of that candle. So if we do the candle right there, boom, look at retrace 50%. Once we got above the 100%, right? And now let's fib out this big green candle right here. which is pretty much the same. We got above it. We didn't hold. Just like down here, we didn't hold below it. And then look, came back down 50%. And you could do that over and over and over again. Of course, there's going to be times where it doesn't work, especially when it's a strong sell-off or a strong force up.
Samper, if I may ask, how do you choose the which dojis to look at? Is it like the only at the 5 minutes time frame or?
I look at all the dojis. They're always good levels to put that because those are what I call pivot points, right? That was a battle, like right here.
Yeah, of course.
Right here, there is a battle between sellers and buyers. Right here. So if I draw a line, which is that orange line right here, the 161, that's my over under level. Of course, the higher the time frame is, the stronger that level is going to be. Like if you have a daily doji level, it's most likely going to bounce or reject that level. But the last 3 months, I've paid more attention to the 5 minute. The 1 minute, if you're a new trader, it can give you anxiety, or you can get stopped out, you can get wicked out. The 1 minute is a lot volatile. Um, and it makes it a little bit harder for you to read price action. As a new trader, especially if you're trading NQ, price action is really, really fast. Right now, it's not that fast because we're barely coming into power hour. So it's gonna start to pick up.
Yeah.
Um,
Because I was taught in the past to look at the 5 minute tweezer tops usually or tweezer bottoms. These are
mhm.
really good places for a breakout.
Yeah, and like I said earlier in the pre-meeting, is these wicks.
Yep.
These wicks are like, let me see. What happened to my volume profile? It's there, but I don't know why it's not there.
You mean if they match, if they align with a volume profile node?
They usually do, but what
Mhm.
I mean is like, for instance, where's a good example? Well, we'll use this wick right here. Because there's no price action that's came around this wick, right? So if we draw a line
Yeah.
on that wick, if we draw a line on that wick, let me draw a regular line. I'm not sure why my volume profile is not showing up. So if we draw a line on this white wick, if we were to get above that wick, that means that a lot of sellers, even if it happens here or down here, that's where the sellers are willing to come in. And if we get above that wick, the
The
price
bailouts.
action is gonna start picking up. It
Yeah.
might dip down a little bit because that's where sellers think that that's the best area to come in at. Um, but if it pushes above that wick and it stays above that wick, it's most likely a squeeze is going to happen because the seller's got a stop loss right here, probably, I don't know, 2 to 4 ticks or maybe a couple of points, maybe 5 points up or down
Yeah.
if you're in a wick down here. So like right here we got below that wick, right, with these two candles, and it didn't hold. But you notice right here it squeezed down. And where did it squeeze down to? A doji level.
Yeah.
So these wicks, like dojis, I pay attention to their body and their wicks. Their bodies tell me that sellers or buy, like for this instance, buyers are coming in. See, like right here, buyers held that body and then it squeezed, and then the sellers came back in because of this. No, I'm not saying just because of that wick,
Yeah.
but that's where sellers came in, right? Because the buyers pushed it up sellers came in strong and pushed it down.
It's also the same level as a green wick. Yeah, yeah, yeah.
Yep.
This one. Yeah.
Yep. So look at that split candle. That's another type of candle that you should be. That's another over under level right here. And if you look,
What's a split candle? Can you identify it, please, again?
a split candle, I don't know how to explain it.
Like a
Uh,
dreidel.
It's just like this. See how it's a small
Yeah.
candle and there's a
Spinning,
big,
spinning top or spinning bottom, they call them
yeah.
sometimes.
So it's like a little stop point, and it's just a small
Mm.
little doji or a small little spinning
Okay.
spinning top, and then there's two big red candles. See, like right here, it's kind of like a split, but I wanted this big green body right here to be bigger.
Okay, gotcha, gotcha.
But it's just right there in the middle.
It's also an
No, okay,
inside bar, by the
understood.
way. So
Oh, that's what they are.
And I have a question about the trend.
Yes. Shoot.
So, which, like what you explained at the beginning of the recording is, got it, understandable, and basically to summarize it is stay patient.
Yep. Patience pays. That's what I always say.
But now the question is, for example, this week I got absolutely wrecked multiple times on trying, which I was patient, and I'm trying to go long off these bottoms, right? Off the bases. And I guess my entry is wrong because I am getting, which I think I'm getting in on the confirmation, but I'm literally getting right almost at the top and I'm getting smacked down by a 20 freaking point candle and boom, I'm done. So, and that's my question about a trend. Like, for example, to identify like a daily trend and let's say only look for shorts instead of continue looking for longs, or vice versa.
It depends because, like, for me, right, I was only a long player for the longest time. So I would look for a counter trend long in a short day. I wouldn't be looking for a short play because for some reason my eyes or my brain could not look at short. Like I couldn't see lower highs for some reason, even though I can see it on the chart, but my brain couldn't interpret it. Hey, that's a lower high. You should get in short. So what I would do, so I came up with the play where instead of trying to catch, a 10 to 15 point ES move, I would counter trend and my counter trend would be 4 to 6 points. So 4 to 6 points on a down day in a short day would be a good play. But I wouldn't be trying to catch knives, right? I would always wait for a higher low to be created. Right? Like you said you would try to get in at the bottom, right? Like let's just take this for example.
Mm-hmm.
So you would try to get in here, right? To go up.
To go long, yeah.
Yeah, to go up.
No, I will, you know what I would do? Like where you marked it off, I'll be like, okay, cool. And sometimes, did I make that mistake a few times? Absolutely. I got in on that green candle and I got smashed down on the next freaking 17 red candles, But I would sometimes also wait. So we go up, we go down, and then I will get in for the second leg,
Right here.
and then it will just fail.
But what are you using? Are you using like the RSI and MACD? Are you using
I was, yeah.
trend meter? Yeah, but take a look at it in hindsight, right? If you get in here, look at RSI. Is it any bullish?
No, not yet.
Is MACD bullish?
No.
Okay, so that would say no entry here,
Mm.
right? No entry here, right? So then this one would have been a better entry. And you tell me why?
Well, because MACD is starting to look up. And because the red oscillator is already reducing sellers.
And what else?
And RSI is already at what, like above 20, I think?
No.
Yeah,
Better-
higher lows.
That's a better answer. Higher low. What's the RSI stand for?
Relative strength index.
Okay, so higher lows means
That the strength of selling is, dying.
and the strength of.
Buying is rising.
There we go.
Hmm.
You see what I mean? Why would I get in here if everything else was down?
Yeah.
You could have got in here, but that's not even my style. Sometimes I'll play that and sometimes it'll go against me. But a better play would be is wait for the base. You can either fit this out, from here to here. Because I'm looking for a higher low. I'm looking for a higher low right here, right? As soon as, like, you got to train your brain. I see a base. I see a base. Now I wait for the higher low, which is right here. And you don't have to wait for a higher low, right? To fib it. You can fib it. You can fib it as soon as you get that red candle. When I say red pullback or green pullback, if you're going long, if you're going short, you wait for the green pullback. If you're going long, you wait for a red pullback. So the red pullback would be from here to that red candle. Or you can do the green candle. Either way, whatever you like to do. I usually do the red candle for some reason. But either one would work. Because look, if I go to the red candle, look at where it held. Golden pocket, right? If I go here, you have to wait a little bit more, but you have to wait for it to break above, right? So I tend to do this way. Because I like my confirmation coming from the top side. So then you get in here, hold that doji. Look at that doji again. Break up. You could get in at the 50% anywhere in this zone. All the way down to the 38 where this yellow line is. That's the golden pocket. So you have a couple entries, right? 50%, the 38, the 60. What I like to do is wait for the pullback. This is called the pullback low. It's a pullback low because here's the low, right? This little red doji. I identify it as the low candle. So then I wait for it to break one tick above that doji and enter right there. Or you get worst case if you and this is not a good habit to start is break above the 10 because that's kind of chasing. Even though you can still catch the move, that's chasing. And I forgot to mention over here. So over here, we identified that there was RSI against you, MACD against you, and there's one more thing that's against you. And it's in this area right here. You identify it?
Well, the moving average is
Yep. Look at the slope of the 10.
10 and 50 probably.
No, just the 10. The 10 will tell you. The 10 will look at the slope of the 10.
That's the 10, right? The one, yeah, okay.
The
Yeah,
white
that's
one.
the 10.
Look at the slope of it. It just knifed through everything. So you had the RSI, the moving average, MACD, all against you. So this would have been a bad entry.
Hmm.
Right? This could have been a better entry. This is the best entry.
Okay.
And this is a counter because we're on a downtrend like this, right? This is a counter trend move. Even though on NQ, this move can be 100 points. And that's what you have to take relative. You have to, on ES, this could have been 20 points, which is still monster.
Well, the question is how to mostly, I guess, realize what the main trend is, right? So like we're still going down. Like this is not a reverse. So what the only answer is patience.
That or the moving averages tell you it's a downtrend. Oh, that's a 1 minute. Hold on. What was today? Oh, that was from yesterday. Yeah, so here's the day, right? Here's the midnight.
Mm-hmm.
So just zoom out. Zoom out. Hey, are we in a downtrend or a uptrend? Usually what tells you it's a up or a downtrend are the longer time frame moving averages. That's the most it'll do. But look at it right here. What's right here that's gonna tell me that we're gonna be on a downtrend?
Double top.
Well, the moving averages wise.
Oh, they're all flat. They're all together.
But we get this, the red is the 200, the blue is the 666. So
Oh, that's switching. That will be.
most of the time, when the 200 crosses, this is probably like 90 to 99% of the time. When the longer time frame, and look at, if you go back in time, these are different days, right? So look, the 200 above the 666, what are we in?
Up, rise.
Uptrend. The 200 crosses down the 666. What are we in? Downtrend.
Mhm.
And then sideways, right? And then sideways chop. And now the 200 crosses above the 666. What are we in?
Mm-hmm. Uptrend, uptrend.
And now this way, right? Now it's below.
Mm-hmm, mm-hmm.
So now what are we in? Downtrend. And you,
That's okay. That's a 15-minute.
yeah, this is a 15-minute, but this goes for the any time frame. Usually look at from here, from 9:15 a.m. It was a few days. Look at from the 2nd of July all the way to 2 weeks later. And it started right here. We broke the 200. We broke the 200, broke the 666. So now it's pulling down that 200 down. And then we finally sideways for a day or two, maybe 3 days right here. And then we break. And then look. And then from there, from the 16th, damn, even now. And then we cross above it right here. Almost 2 weeks. So every 2 weeks, just from the 15-minute, every 2 weeks, it looks like. Right here, look at it, it crossed over and it didn't. And it crossed back down.
Some kind of crossing happening.
But the average is every 2 weeks, it changes direction. See, for 2 weeks, we're in a downtrend. And you could do that with any moving average. Just look at it the same way, right? From here, that's the 31st at 8 a.m. to right now, 2 days on the 5-minute, 2 days. And then right here, look, from the 30th to the 31st, a day or two. And then again, look, a day or two. And this one was a big one. This was a couple of days. Right here to right here. That was 3 days. You notice once we get the longer time frame moving average crosses, it's in that trend for a longer time.
Yeah.
So
Yeah, definitely.
that's a good way to determine bias. And usually you can go all the way to your daily bias. And what's it telling you? We're above the 666. Everything's stacked up perfectly. And then right here we break. Look, last time we broke above right here. How many days is that? From May all the way to now. That's 2 months. From here to here, that's 1 month. And then it gets all fucked up, but you guys get the point.
Hmm.
Now where's my 200? Not on here. Should be. I don't know where it's at. So now we crossed those. So now look at the 50 SMA. It's not sloped up no more, it's flat. This big pullback right here. This big pullback right here is gonna pull that SMA down. So we might get this. And then come back down. And then next thing you know, all the moving averages are down here. So what should you expect? What should you expect on Sunday? You should expect a retest of a moving average. I don't know where it's going to close. Where it's going to close today. If it's above the 666 or below it. But look at, and this is why I say, what should you expect on Monday or Sunday? The RSI, what's it look like?
Well,
Higher lows.
side,
I
it's kind of looking down, but it's oversold. Oh yeah, it's building the higher low.
And we're still going down, right?
Yeah.
So now,
MACD is also down.
now you need to see this like this, right?
Mm-hmm.
So Sunday or Monday, since the RSI is telling me, even though we're going down, the strength of buyers is coming in. So the buyers think this is a good area right here to get in at.
So we can have a bounce on Monday.
Yes, sir.
Okay.
Yes, sir. A bounce to retest a level of your choosing. A
50
level
SMA.
that would be a big
What
bounce.
level?
That would be a daily. That'd probably take a couple days. I mean, look at right here. It was 2 days. It went all the way up to the 50 SMA. But what tells you that? What tells you that it's going to? Okay, so right here we smashed the freaking 50 SMA. And then we smashed we smashed through. The only potential pullback was right there to go short. And we even have a gap right there, it looks like. Oh no, we don't. Never mind. Thought there was a gap. But when we smash through these levels, and that's why I wanted to see this body close. If it closes below that 666, we might just retest it and continue going down. Remember though, this is why I like studying different strategies, because sometimes you'll get different ideas or different tips from other strategies. One of them being the ICT model. I learned that Sundays and Mondays are usually accumulation days. So usually Mondays are like little body. Look at Monday. This was Monday right here. Mondays are usually little bodies, little doji bodies or whatever the case. And then you have the manipulation on Tuesdays and Wednesdays, sometimes just Tuesdays, depending on if there's data. Sometimes you'll have manipulation just for Tuesday. So usually Sunday and Monday are accumulation. So they're trying to trap sellers and buyers. That's you guys got to think on a Monday and a Sunday. Why do you think Fridays and Mondays are some of the hardest trading? Because on Monday they're trying to manipulate, or not manipulate, but accumulate, pretty much manipulating you in a sense. They're trying to trap both sides. So like Sundays and Mondays, sometimes it's hard to trade because they're trying to trap sellers and buyers, right? And then Tuesdays and Wednesdays are the manipulation days. The manipulation is you have to think the opposite of everybody else. You know, is everybody thinking long? Okay, then I'm gonna go short. If everybody else is thinking short, then I'm gonna go long. Because that's a manipulation day. You have to, how is the market? So Sundays and Mondays, think about how is the market trying to trap me, right? On Tuesdays and Wednesdays, how is the market trying to manipulate you? And then the best days of trade is Wednesdays and Thursdays, depending if there's news or data. But Wednesdays and Thursdays are because that's when the move is already decided on which way it's gonna go. And the third, right? The Mondays and Tuesdays is the accumulation. Tuesdays and Wednesdays are manipulation. And then Wednesdays and Thursdays, sometimes all the way to Friday. But Wednesdays and Thursdays are distribution, which is distributing the move. And look at what happened. We got accumulation on this day. Look at trying to trap sellers and buyers, right? And then we got manipulation right here. 2 days of manipulation. And then we got 2 days of distribution. You guys see that? It finally decided that the move was down on yesterday and today. And then we had the manipulation right here. And then Monday, we had the accumulation. Same for last week. Look, accumulation right here. These two candles, these candles right here.
Yeah.
Right? We got accumulation. Look at a doji. Manipulation again. Distribution. You guys see that? Now every day, ask yourself, today is a Monday, how am I gonna get trapped? Today is a Tuesday, how am I gonna get manipulated? So if you can only trade, the best trading days are Wednesdays and Thursdays. You can make your weekly goal, your monthly goal, just on those 2 days. But you have to understand how the market works. And I think understanding that on Mondays, we usually accumulate, right? They try to trap both sides. Tuesdays, they try to manipulate. Tuesdays and Wednesdays, right? They had to trap more. See, they got the sellers and then they trapped them and squeezed them out. And then finally, we're like, okay, we got our daily 50 SMA right here. Let's just distribute it all the way down to the 666. So what's going to happen Monday? Monday, we'll probably get a little doji body right here, a little candle like this, whether it's red or green, I don't know. We might retest the 6, depending on where we close. We might retest the 666 or maybe even up 50% of this body. And then Tuesday, if we don't test the 50% of that body, we'll probably get a green candle like this. Tuesday and Wednesday, we might get another red candle like this. Right? So we got Monday, Sunday right here, Tuesday, and then Wednesday, and then depending on where we at, if this is red or green, we're either gonna continue going down or we're gonna come back up and test the 100 EMA, or maybe even the 10 SMA, because the 10 SMA looks like it might be somewhere down here. But that's just my prediction. Does that answer your question, Russ?
Yeah, it did. I will rewatch the video anyway, because this is recording, right?
Yeah, it's
But
posted on
the
YouTube.
explanation on a higher time frame, moving average is the 600 and the 200 cross. I think that will give me a good. I'm gonna try to use it this coming on week.
Put it into action. Tell me how it goes. You should, but the biggest thing is when you're trading. When
Like
you're
I
trading,
basically need to stop going against the trend. Like that's something that really irritated me this week, where even in sim I was just down, down, down until I realized I need to stop doing it and I need to go with the trend. So I started looking for a place to go with the trend, and boom, completely different world, you know?
yeah,
It's like the
but
market just gives you money when you're with the trend.
yeah, trend is your friend. There's a reason why there's a reason why that saying is how it is. Trend is your friend, right?
So I
But
would like to learn to eliminate the issues of going against the trend. That's the point of my whole question and discussion today.
yeah, and you gotta zoom out. You know, you can't be micro, you gotta be macro. You gotta look at the whole picture. You gotta zoom out. Because usually when you get zoomed in, you get tunnel vision and you're gonna get fucked. You're gonna get screwed. Um, like if you can't tell direction or if you can't tell bias, then you need to zoom out. And that goes for any time frame, right? If I'm on the 1 minute, there's a 5 minute trumps the 1 minute. And
Yeah.
and the 15 minute trumps the 5 minute. And it so on all the way up to the daily. Whatever time frame you use, if you're using the 1 hour, you know, it's gonna let you know where it's at. Because this can still be a uptrend, even though it's currently in the micro, it's a downtrend. You know what I'm saying? Because we're in an uptrend, right? So this can be a lower lower low, but in this context, uh, hold on one sec.
We're
In
going
this
too far.
in this context, it's a lower low, right? Because it's a downtrend micro. But we haven't broken this low right here.
Mm-hmm.
So we're still in an uptrend, macro, longer time. Right? But we always trade the chart in front of us. So for the week, like if none of this was here, none of this was here. Right? We're in an uptrend. So for this week, right here, the 50 SMA is still sloped up. This is sloped up. So we're in an uptrend. So for this whole week right here, that's too messy. So for this whole week right here, we know we're going up. So now we topped off, right? So if you could even fit out once we hit the top, we know we hit the top because we got this big red candle and we never got back above. We never created a higher low right here. But we have our first green pullback. So look, enter the golden pocket. If you had $1 million and you could swing, you could have swung all this to the 100%, even to the 161. Swung it down. Psh. Sat it right here and forget it. And look at where it bounced. 261 bounced right here. Psh. So the next level is a 423, which might be somewhere down here. I don't know. Fadeaway don't have 423. You can't add it. But it's pretty damn near the 423 right here. So what I think is gonna happen next week is come back down, come back up, and either go down, because then we're still in a downtrend, right? But then what is it setting up for? What is this pattern right here? You guys don't know what that pattern is?
The fall.
Huh?
I think that's kind of what, like a kind of a falling wedge, except it's not actually wedging.
It's not, but usually I just do it like this, you know. It's a channel. It to me it'd be a falling wedge,
I mean, true, yeah, it's just a channel.
but it's like a falling wedge forming, right? So what can happen? This can happen. Bust out, come back, tag it, and then go up. And it's gonna form a W, big old W. And when it, we might go up for a little pop next week, maybe to the 100 EMA or the 50 SMA, like Wave said. So we go like this, pop up to the 100 or the 50. So either here or here. Since the 10 SMA will be at the 100, I think we're gonna get I think this is what's going to happen. Come up to here, come back down. So this is 1 week and then 2 weeks. This week right here, if we don't get a fat dump, we're gonna create a base right here around the 666. And then on 8/16 is Gande. What happens on Gandes? We get big moves.
Hey, Semper, if you compare this to ES, this is actually front running ES and the fib go to the daily.
Looks like it's setting up for the last 10 minutes.
And then go fib that out from the all-time high. Or fib that out from the high.
Yep.
So it went to the 100, it retraced to the 50, it went down to the 1618, it retraced back to the 100. Now it's headed for the 2618 and in the cycle of the moving averages as well.
Yep.
So that's why I was looking for a retrace of the 50 here. It's a little bit of a smaller area than it is on NQ.
Mm-hmm.
And then down to the 200, which would definitely take the 2618 into consideration along the way. So that's the fib move, the end moving average move that I've been following on the daily. This one has just worked out like clean and beautiful.
Yeah, and I see what you mean. It can,
With the 10 cutting through the 50 as aggressive as it is, I'm not sure that it'll do that, because just like you had talked about earlier, the body of that of today's candle looks like it's closing under the 100 there.
Yep.
Which was kind of my question earlier that you helped with, is, how do I stop from not getting all that profit? So it'll be interesting to see what this closes today.
so if my theory proves right and the body closes below it, we're gonna go like this. Oops. What happened? We're gonna go down, confirm the 100, tag the 261, and then right there, right?
Yeah, this is where it gets interesting with how I feel like NQ is front running ES a little bit where it's already gone to 261 and ES is just
Yep.
a little slow to it. So
Mhm.
if that's the case, then we kind of have a little bit of a foreshadowing on ES as to what's going to happen. That's why the close of this candle is kind of interesting to show us the strength through the 100 or not.
Yes, sir.
Yeah, that's a good point, Semper. I appreciate that tip today.
Yeah. Uh, and what I always say, like if a candle smashes through a level, then the next level is a target, right? But we need to confirm right here that we're going to go down because the NQ already did it. And we know that they take turns swapping, right? Sometimes it's ES leading, sometimes it's NQ leading, or QQQ and SPY. So like I said, Sunday or Monday, it's gonna be a little doji body like this. And then Tuesday, be very careful because remember that's when they try to manipulate. So if it's green, buyers are gonna be like, oh, hell yeah, we're gonna reverse. And then on Wednesday, it's gonna be a big red candle down. But we always trade a chart in front of you. And we just wait. Wait for the confirmation to see if our prediction or forecast proves right. Because we got two volume beats right here. Look at this green candle was beat out a lot. The only thing that could be a little confusing is higher lows on the RSI. So that's why I'm saying Monday or Tuesday we might get a little pop. Maybe up to this zone. And then down. Or if we pop up and we hold the 100 right here, then we can go up to the 10 SMA or the 50 SMA. Right. And then on Wednesday or Thursday, depending on how the 50 and the 10 look, we can continue going up or we can go down. Too many arrows, but you guys get the gist. Trade the chart in front of you, check for bias, what can potentially happen. And another thing I recommend is do your breakdown the day before, like Lasagna Cat and had mentioned that you want to marinate to see what's going to happen throughout the night, to see if you're going to get the setup that you want for pre-market. And if it doesn't set up, then you got to evaluate again. Do your planning for the next day. You always want to leave yourself 3 scenarios, right? At least 2, but if you can do 3, even that the better. Just like finding your grade A setup, you need to find your grade A scenario, your grade B scenario, grade C scenario. Because the market can always do what it wants to do. You always got to think to yourself, how is the market trying to screw you? How is the market trying to trap me? How is the market trying to manipulate me? You got to think like the market, not like the traders. As if you think like the traders, then you're gonna be liquidity, you're gonna get manipulated. But I think we'll cut it there, and we'll see what happens next week. Since Toad didn't have no trades, we will recap his trades next week. In the meantime, Toad, track your shorts and your longs so we can try to figure out if you're a better long player or if you're a better short player. If you can determine if you're a better long player or a short player, Lasagna Cat was a long player. We discovered that. So he would avoid trading short plays until he felt comfortable. Same with Easy. Easy, he's not here today, but Easy was a short player. We figured that out And then once we figured out that he was a short player, he was way more consistent. Now, both of them are trading both directions. So if you can identify what direction you're better at and focus on the direction that you're good at, and then laser in your strategy with that direction, you're gonna become more consistent. You're gonna get more confident. And you're gonna be taking better trades in the long run. Then once you lasered your bias or your direction or whatever direction you're better at, then you can start looking at how you can implement another strategy that can help you go short or in the opposite direction of your grade A setup. Lasagna Cat never went short. Once we went through finding my way with easy. And then once he talked to Easy and figured out what tips and tricks Easy had for going short, then Lasagna Cat has been taking short trades. Same with Easy. Once Easy figured out that he was short, he was lasered in, got consistent with his shorts. Then we went with Dell. He was doing longs and using the ICT model or the fair value gap model. Easy started studying that. Once he lasers that in, now he's playing longs using the ICT model, and then he's playing shorts using his strategy. And he probably has other strategies now, but you want to laser in that strategy. You don't want to wash it with all these other strategies or whatever. If you have a strategy that helps you strictly see price action, like Russ. Russ found Lux Algo, Trading View. What's it called, Russ?
Oh, give me 1 second, I'll tell you. Smart money concept, Lux algo, historical, colored, all tiny, all small, blah blah blah. That's what it's
Yeah,
called.
so we'll just call it SMC model.
Yeah, pretty much. That's, I think I gave you like a couple screenshots of like 2 Lux algo things that I'm using. One of them is the SMC concepts, and the other one is imbalance detector. But I have not seen how this imbalance detector is operating because I'm not even sure I'm seeing any of that stuff. I don't know.
I'll shoot you a video so you can research imbalance a little better. I think once you watch that video, you'll understand imbalance a little better, and then you can probably
Or I'm just not recognizing it, you know?
Yeah. I got a video, not my video. It's actually from Traders Evolve. Danny Trades.
Yeah.
He's the one that helped me understand imbalance a lot better. And I think it'll help you.
So the reason the smart money concept, I really like it because it also shows you break of structure, it shows you change of structure, it shows you like equal high, it like draws it out for you. So all you gotta do is literally sit back, have patience, discipline, and watch.
Mhm.
And you, unless you're blind, you will see a good trade. So, and I really like it. Like this indicator, and you said you're doing the same thing basically. It's teaching you patience. You know what it taught me this week is don't mess around in the middle. Only mess around at the top or the bottom. Nothing in the middle. And if you are messing around in the middle, only short scalps.
Well, not even just short scalps, because in the middle, it's a coin toss, right? But
Yes.
not just hitting the tops or the bottoms, it's waiting for your levels to hit. That's the hardest part because you'll see and that goes for any chat room. When you're in a chat room or a trading room and you're there and you see all these other members, oh, I just got in, I made $100 or whatever it is.
Yep.
It gives you FOMO. It feeds into the FOMO. But if you can just be patient and, like you said, discipline, to wait until your levels are hit. Wait for
Mhm.
your levels to hit. Wait to see how price action reacts at those levels.
Well, see, like for example, I'll give an example. One of the slower time, it was probably, I don't know, maybe around 11 p.m. Eastern time. So I was watching and I noticed that the price is between the boxes, but it's literally getting rejected at 50 SMA. Just gets to 50, pushes down, gets to 50, pushes down. Okay. So I shorted 2 contracts. I got into position, got out at the blue box, boom, easy.
But why do you think it helped? Why do you think you had a better odds of it going in your direction?
Well, the overall trend was that way also. But also I was watching, MACD. I was watching RSI. And 50 SMA was just rejecting it consistently.
But
So
did that box line up with the 50 SMA?
no, the green box, the top box was above it, and the blue box was below it. So 50 SMA was like kind of
Kind of
in the
how
middle, right? Which is like 50%.
kind of how it is right now.
Somewhat, yes.
Yeah, so
Same idea, same idea. And
but
it was, I assume it was 50%.
but right here, since you have your box, right? And you have the 50 SMA, so what's that? That's double resistance. So whenever that's what I call strategy stacking. And if you're a little bit more advanced and you have two strategies that line up, fucking take that trade. Take that trade, whether it's long, short, whatever. You
I'm
have
not advanced, but I took it.
you have two types of traders, right? You have the SMC, whatever, and then you have the moving average traders taking that same trade. So that let's just say it's 100,000 moving average traders and another 100,000 SMC traders. That's 200,000 traders that are taking the trade for one reason, for their strategy, but you're stacking them both together, so now you know what side you're on.
Mm-hmm.
You're on the right side. Or you're trading with 200 traders, 200,000 traders, whatever.
So, Lewis, similar example. Like you see how, for example, like we're looking at your chart right now, right? You see how it goes from the top box to your 10 SMA, goes back to the top box, 10 SMA, top box, 10 SMA, yeah? So pretty much it was the same thing, identical, just reversed,
Mhm.
just short.
Okay. Just be careful. Just because this is long, right? But just be careful because once the level gets tested 3 to 4 times, it's probably going to fail. If it's been tested 3 times, it's probably going to fail the 4th time.
When I did it, I don't know if that was part of my plan or if there's just luck. I have no idea. But I'm just describing what worked out.
Yeah.
I saw a doji candle, right? After the green candle, it touched the 50 SMA doji candle, and then the next candle, as soon as it started going red, I got in it.
Yeah. You have to take what you learn and put it to action. If you don't take action on it, then you're always going to be what if this, what if that, what if.
Yeah, I mean, I took the trade, it worked out. I was like, oh shit, now I can go work out.
Yeah, you'll get stuck in analysis paralysis, and that's what you don't want to do. You want to be able to take what you learn, go take action, take notes, journal. Like, hey, next time maybe I'll wait for the candle to close, or maybe I'll wait for price action to break that doji, and then get in. You have to be able to identify. You need to create a feedback loop.
As well, it needs to be balanced. I feel like needs to be balanced between researching and taking action and patience, but also a balance of appropriate sizing, because sometimes you're like, okay, I'm gonna go fucking 10 contracts and just 5 point scalp and I'm done. And then that 5 point scalp is gonna turn into 20 points against your position.
Yep. But honestly, I don't think you should scale up until you have a cushion.
Yeah, I agree. I was
like
just
like
giving like an example, because when my evals couple of times I did go heavy, and couple of times it worked out beautifully, but couple of times it did not.
yep.
But I
Yeah,
was
and
just trying to pass the eval in 1 or 2 days, you know?
yeah. And it's hard, especially if you have 150K.
Yeah.
I use for 150K, I usually try to shoot for 2 to 3K a day. And that's me being experienced, right? If you're new, I would take that 9K and divide it by however many days you're gonna trade. Obviously less than 30 because you have 30 days to pass. So take it and divide it by 20 and see
I've
what
got a
that
trick. I'm sorry. Go ahead.
divided by 20 and figure out what your daily goal should be. And if you're hitting that, or if you smack that, like say you hit your goal, if you double the goal, then fucking call it quits. Stop trying to force trades the whole day. If you can stop
Yeah.
forcing trades the whole day, you will be way more consistent. Way more consistent. And that's why I'm for a daily goal. A daily goal not only builds consistency, but it builds confidence. You need to build that confidence. That confidence is gonna. Now that being said, it's a catch 22, right? Because once you have so much confidence, you can get blinded by confidence. And I've been there. Trust me, I've been there a few times when I blew up 3 personal accounts where I was up and then I was like, oh, I'll just hold it. I'll just let it go. And I just stepped away from my computer. I was working. And next thing you know, it blew up my account. And that was me being cocky. I was like a whole month green. I hit my monthly goal, and then the next month I was like, hell yeah, I'm gonna do it again. And then next thing you know, I blew it up. And that can happen with the prop firms too. You pass your eval and you're like, hell yeah, I did it in 2 days or I did it in a week.
Yep.
You're not building upon that consistency. That's what you want to build upon.
Yeah, I've
And
done it.
what's that?
But I've done it. I've done it where I did freaking 2 PAs in 1 day. But guess what happened next 2 days? I blew them up, both of them.
Yeah, because like you need to create a system. Like once you pass, maybe drop down to micros instead of doing one NQ, then do 10 MNQ. Because
That's a good point.
it'll allow you to manage your trade better.
Mm.
And having a daily goal. Don't try to go in, oh yeah, I passed my PA. Let me go try to hit the profit goal, which is if you have 150K, the profit goal to be able to cash out is 5,500. But not only that, you need to have 10 trading days.
Yeah.
Um, so you need to figure, depending on whatever platform or prop firm you're using, you need to create a system for it. And when you're able to cash out, cash out.
Mm-hmm.
Don't.
Well, I can share how I do the 150K challenge. I basically, and I found great success with it. I do mess up with it a lot too, because then I get this ego boost out of nowhere, and I'm like, oh man, screw doing this for 1 week. I'm gonna do this in freaking 1 day or 2 days, and I'll be at like 7K, and I'm like, all right, one more trade, and then boom, done.
Yeah.
Meaning it blew up.
Yeah.
Like one bad trade, and I'm like, fudge, I'm like, now I gotta do it again, and I just wasted freaking $35. I'm like, damn it. That's why now I'm taking it slow, but my basic setup is I'm gonna, let's say your total goal is 9,000, right? To pass the eval.
Mhm.
I break it down into 10 days. So let's say on average, I need 1,000 per day.
Yep.
I'm like, how many points is that? Okay, that's about 20 points. Let's say I'm gonna trade 4 contracts. It's 20 points. I'm like, all right, so what do I need to do? I need to have either one trade like that, or to make it easier, let's say 4 trades.
Yep.
And let's say if one trade goes into like 10-point profit, okay, then I just reduced my amount of trades per day, you know?
Yep.
So and then I've been having success with that, where my, target profit, let's say somewhere around 1,000, 1,200, 1,500, like between that, and then just take 4 trades, 4 contracts, 5 points each. All I need is 20 points from the market per day. You're done. Sometimes you make 1,000. Sometimes it's just one of those days where you're gonna make 2, you know?
Yep.
But if you stick to that as a basic concept, it works.
That's exactly
you
what I
know,
did. That's exactly what I did when I started with $600.
Like I'm on a treadmill. I'm like, all I need is 20 points. That's it. That's
Yep.
4 trades, 5 points each trade. Done. Less exposure to the market, less chance I give the market to punch me in the face.
Yes, sir. That's the way that's the exact same strategy that I used to grow my $600 account to, a few thousand. Where
Well, now I'm gonna apply the same thing because it works.
it does.
And I'm gonna apply the same thing to PA account. And with God's help, universe and trading matrix, hopefully, it works.
Don't get greedy. Greedy kills.
No.
Greedy kills.
Yes.
Patience
Yeah.
pays. Patience will pay the bill.
Yes, sir. Because I'm trying to age one of the PA accounts. I'm trying to age it.
Yep.
Where it's past 60 days, whatever,
Mhm.
where I don't have to be capped by the maximum payout amount restriction, you know?
Yep.
So if I make, 10K that 10 days, I can just take 10K out,
Yep.
if they approve it, that is.
As long as you're consistent and you're not making $5,000 one day, $1,000 the next, a couple hundred the next, you're gonna be good. If you stay consistent, you will not have any issues with payouts. Me, I'm shooting between $600 to $1,200 a day per account. Staying low, under the radar, let it grow. And cash out. Cash out
Let
when
me ask you this question. Let's say you take a trade in like when the market opens, 1800 Eastern time, somewhere between 1800 and let's say 0800, right? You take one trade, but it's still the previous day. Let's say you take it before midnight. You took one trade, let's say $200.
Mhm.
And then on the new day, you took, let's say you made another 1,000. Now, are they gonna count as you took 2 days to trade or one day?
They go off of days, not by trading session.
Okay, so it should be 2 days then.
Yes.
Okay, all right.
Yeah,
Roger
because
that.
I usually at max take 4 trades no matter what. But I take 4 trades per session, right? So from when it opens up at 1800 until, or well, let's do it in my time. So it opens up at 1500 my time and it closes at 1400, right? The next day at 2 o'clock. I take 4 trades that whole session, even though it's 2 days from, like, say, yesterday to today. From 3 p.m. yesterday to 2 p.m. today, I only take 4 trades, no matter what.
I need to stick to that, like hardcore. I need to freaking stick to that because
And
sometimes
the
I
crazy
mess
part
up.
that you're gonna start hitting your goal in 1 to 2 trades.
Yeah.
Once you start hitting your goal in 1 to 2 trades, do not say I can make more. Let me take I have 2 more trades in my pocket. Let me take another trade. Do not
You
do
know
that
what
because you will
usually
give money
is that
back.
last 20 bucks. You know, let's say I'm up like $950, and I'm like, all right, bro, one more quick trade, I'll make that 50 bucks,
Nope,
and
don't
we're
do it.
good.
Don't do
And
it.
then it just rails me.
Don't do it. Don't do it. I've
Mm.
been there, bro. I've been there so many times where I'm like, oh, I'm only $20 from $1,200. And boom, minus 580. I was like, what the fuck? Why did I take that
Yeah.
trade?
Like in my case, I would be like, my total P&L will be like minus 580.
No, you need to have a cut. Like, you have to identify, okay, if I take this trade, this is how much profit I'm willing to give back. And even then, dude, like if you hit your goal, like let's say you take 4 trades for 2 weeks straight, 4 trades, you're hitting your goal. And then the next week you hit your goal in 2 trades or 3 trades. And then you're like, I got one more trade. Let me just take it. It's like 80 to 90% probability that you're gonna give that money back. Because you have that, you're getting blinded by that confidence. You're like, I just made $1,150 in 2 trades. Let me take a little quick one. I can make another easy 50 bucks. And it's not that easy because you're being blinded or you're forcing a trade that you shouldn't even be in.
Last
Yeah.
week or a couple weeks ago, maybe Toad said something. We're talking about like when you're going for your target and it just misses it by like a tick. And he's like, yeah, don't be a dick for a tick. Meaning, take your profits close enough, man.
Yeah.
If that's
Yeah.
it. And this is the same thing. If your target, whatever, let's say your target's $1,000 a day, you're at 950. You hit your target, man. In my opinion, you hit your target. Just because it didn't actually physically get to the actual dollar amount. I mean, that is damn close enough. And the next time you might be at 1,050. You go over your target a little, because just the way it all kind of averages out. But yeah, I mean, you're that close, you hit your target.
Another thing that you could do is say you hit your goal. Say you hit your $20 or $50 or whatever, and you have one more trade. Only trade your grade A setup, your grade A plus setup. Don't be trying to be like, oh, this is my grade B, or this is a trade that should go up. Should
Yeah.
be taken out of your vocabulary.
Well, speaking of don't be a dick for a tick, right? You guys remember I kept saying it's gonna go back to 460 NQ?
Yep.
And look at what happened at 1551. It went down to 461.75. And my target exit was 460.75. So I missed it by 1 point because I wasn't paying attention.
Yeah. Yeah, definitely be on the computer, or at
Well,
least
it was
have
a
fishing
thing,
orders
so
out or
we were
trail stop
talking.
on.
I need to, you know what? I need to learn how to freaking set that up, like have that, like that trail stop thing. No, I mean, I still in sim, I'm still in a huge profit today, but it was just that big trade that I've been managing for like last 4 hours,
Yeah.
and I missed by 1 point. But it was like 60-point trade on. I kept adding and removing contract, adding and removing contract. So it was a Brandon style trade basically, which I will never be able to do it in Apex, but it was just for fun basically.